I'm Nicholas Pelecanos, and you're listening to A Trader's Life, the podcast where I get to talk to successful traders about their approach to trading, how they started out and went from broke or breaking even to pulling in thousands of dollars a week. Trading is a tough game. They say only around 5% of those who try actually make a profit. Join me for A Trader's Life to glean some valuable insights from the market wizards I get to talk to. Midway through 2021, I was looking for a means of making some passive income that involved no trading risk. And I came across a company operating in the crypto space that specializes in masternoding. This company, called Yield Nodes, generates returns by verifying new blocks of transactions in cryptocurrencies. What they've done is to allow the public to participate in their platform by way of placing a stake in the business. This being the crypto space, I was intrigued but naturally somewhat cautious about getting involved. I reached out to the CEO, Steve Horman, and invited him onto the show. I found him very transparent and helpful. Episode 40 if you fancy a listen. So the first thing to note, this company has been very favorably reviewed by independent experts. The second thing to note is that you can make a very good return, around 10% per month on whatever stake you put in. When you factor in compounding, you're looking at something more like 220% per annum. So if you want better returns for your savings than your local bank gives you, and a means of generating steady passive income that doesn't involve trading for a change, I say this is a very good platform to try out. My daughter, a film editor and highly skeptical of anything crypto related, got started with 500 euros, just to give it a go. She's been averaging 50 euros a month since that time. Now, neither she nor I are financial advisors, so obviously do your own due diligence before getting involved. Suffice to say, it doesn't take long to make back your initial stake at returns like these. If you want to participate in the Yield Nodes offering, do please consider helping this podcast by signing up through my link in the show notes. It'll be yieldnodes.com/atraderslife. Instead of the usual minimum deposit of 500 euros, you can make a start with as little as 50 euros. That helps you, and it helps me pay my hosting fees each month. Okay, that was Yield Nodes. Now on with the show. Early February 2021, I got together with crypto trader Nicholas Pelecanos. Nick got into trading pretty early on in life. When he blew his first account, he formed a trading club, which became the most successful university trading club in Australia. He tried a bit of everything to begin with, but gravitated to Bitcoin. Today, he has his own list of clients and has become something of an expert in all things blockchain. Here's our conversation. Hello, Nicholas. How's it going?
Hey, Nick. Yeah, good. Thanks. Yourself?
Good. Yeah, fine. Thanks. In spite of what is going on around the world, at least reasonably fit. How about you? You good?
Yeah, I guess you could say that. I'm in the process of moving flats. So
Yeah.
That's always a fun experience. So yeah.
Yeah, a bit of a challenge.
Fine, I guess.
Yeah. So, when it comes to trading, your main focus is crypto, isn't it? You had an interesting story to tell me last time we spoke, how you got started. Perhaps you care to share that with my listeners today.
Sure. Yeah. So I guess how far back do you want me to go?
Well, to the beginning. I always find it interesting how people started out. So, and I think other people do as well. So yeah, tell me again.
Well, I think for me, I guess it all starts back in high school. So when I was 16, I had somewhat of an interest in markets and sort of saved up some money and there was a like a mining boom going on in Australia at the time. So I sort of got in exposure with BHP, which I still have to this day, actually. And that sort of is where it all started. I studied business as a result. but I was also studying physics because I wanted to be in the Air Force. And after high school, I tried to get into the Air Force, and I got psychometrically tested, and they told me that I wouldn't do well with authority, and that I can continue to apply, but I probably won't enjoy Air Force life. But so I guess that left me at like a bit of a fork in the road. So at that stage, I had strong business and physics, and there was a double degree for engineering and finance offered at one of the universities in my city. So I took that, went and started studying. So I was studying finance engineering. I really had an interest for economics, and I really had a disinterest in engineering. And that only grew as I sort of went through my degrees. And then sort of towards the end of my finance degree, I met this guy from Singapore who was on exchange, and he was telling me about leverage trading and CFDs, and I'd never really heard of these before. And I like I said, I'd had an interest in investing and trading, but I didn't understand that you could start making exposures with a small amount of capital and start seeing sort of decent returns. I didn't like essentially the concept of leverage. So the little amount of money like a poor uni student saved up, I moved into a spread betting account, and basically, like I think on my first trade, I made like $180, and I was just like cheering because at the time that was like almost
Yeah,
what I
that's
was
a lot.
getting paid a week, or maybe even more. I can't remember.
How much did you put in your initial outlay?
It was so basically I was saving money through high school and uni, and I put in half of that. So the lump sum was 10K. I put in 5K, and then I was basically trading currency pairs. And I think I sort of clicked that $180. The next trade I made, I lost $3,000.
Oh boy, that's a rude awakening, wasn't it?
Yeah. So, I mean, I guess what that goes to show is I had no clue what I was doing, and like I prefaced this with, is I was in the latter stages of my finance degree, and I realized that had essentially not prepared me at all for sort of markets. So again, with that same Singaporean guy, I started a trading club at my university. Essentially, the concept was, if you get a bunch of sort of smart, motivated people together working on a problem, you'll probably find some solutions. Essentially, yeah, we started sort of getting people together, and sort of learning what we could. I mean, that started to like get a bit of momentum, and we actually started to get sort of profitable just doing basic TA, like technical analysis on sort of indices, currencies, and commodities, and then sort of applying, sort of macro fundamentals to sort of back up like our hypothesis on what we should be trading. I guess that sort of laid the foundation of how I think about markets and entering and exiting positions. And that continued to grow. The club continued to grow. It actually grew to be sort of the biggest specialized trading student club in Australia. I had one of like the fund managers from like the largest fund in my city come out and start doing talks to our club. That was actually the first real experience I had talking to a real fund manager. And, kind of like, I guess I was, and the other guys in the club were all sort of like, but almost kind of like fans, how you'd be if you saw like a rock star you saw. We were just a little bit starstruck. Like, oh, wow, this guy actually does this stuff. And so he was actually really helpful, and we actually formalized the club a bit more, kind of modeled off his fund, and we had we made proper teams. So we had currency team, indices team, commodities team, and within those teams we had head analysts and junior analysts and senior analysts. And I sort of sat on top of that as like the president, and essentially every team would try and find opportunities and then would share them amongst all the students. And I mean, that actually started to become pretty good. I think it's sort of pretty exciting when you can have a bunch of uni students actually make money
Yeah,
from the
definitely.
markets. I mean, I think
Did you all put money in? Like 1,000 each or something like that?
oh, so we were just all on our own accounts, but we were all doing the same exposures. I mean, you could do whatever you want, but we had all of the information was shared. It was very reciprocal, and if you wanted to say you were in the indices team and you wanted to get like an understanding on palladium or something, you could go and chat to the commodities guys, and they would tell you everything they think and what the trade should look like. And so it was actually a really good incubator for sort of me, and actually a few students came out of that who are sort of doing quite exciting things now. Um, and I guess sort of the last thing on that sort of section of my trading career is I met another fund manager who actually set up one of the largest. Well, I don't know if it's one of the largest, but it was definitely one of the fastest growing, and it was quite well known funds in Australia. And it actually had a sort of a demise a few years after I met him. But I remember meeting him going, this guy doesn't seem like a super intelligent person. I was thinking, if this guy can do it, surely I can do it, right?
Yeah.
Um,
Yeah. Interesting the way you approached your initial disappointment. I mean, that's quite a heavy loss, isn't it? 3,000. That's kind of a slap in the face, especially when you started quite well. And then a lot of us sort of go in on ourselves, but you thought, right, well, I'll actually go out and meet other people, and through their help, I will improve my knowledge and my skills, which is very mature sort of response to a nasty disappointment early on. Was it
mm.
really that quick? You just thought, 3,000. That's too much to have that again. I must go and find other people. Was that pretty much how you saw it?
Yeah, I mean, I guess there's like two things there. One is there's this reoccurring. I mean, everyone faces adversity in their life, right? And there's an image that stuck with me since I was maybe like a kid, that I've sort of always drawn inspiration from whenever I've been in a place of struggle or I've hit a wall or something. And that's like a little. If I can go down that if you want, that's like a little side tangent.
Yeah, go on.
Um, yeah. Okay. So my grandfather, my mother's father, was during World War II. He was a boilermaker, so he was actually building ships. He tried to join the Navy, but they wouldn't let him because they needed to get ships built. And when he was retired in his later years, he volunteered at the Naval Museum in our city, just to sort of maintain the ships there. And when I was little, like 3 years old, he used to sort of babysit me, and I would run around on these ships as a kid, and it was sort of fun to get lost in. But what's always stuck with me is this story. There's this painting. It's a famous Australian like war painting of this guy who's strapped to a anti-aircraft gun on a sinking ship, and he actually won the Victoria Cross last year. He was finally recognised. His name's Teddy something. Um, but essentially, the story goes is he was shot through the leg. Japanese were bombing these Australian warships, and the captain orders abandon ship. So everyone abandoned ship, and he just decides to stay. He sort of just straps himself to the gun, and he got the Victoria Cross because they say you could still see him firing even when the ship was underwater. So this guy essentially was faced with adversity, made a decision to just go down with it, and he did, right. And I think that's sort of every time I've sort of been in a like a dark place, that's where I come back to that. It's like you either abandon ship or you go down with the ship, and I've always enjoyed sort of saying, "Oh, well, I'm going to go down with it." Um, so yeah, it's a side tangent. So yeah, I mean, I got after I burnt that first account, which is pretty quick. I actually put the other remaining $5,000 I had in, and I burnt that as well. But I mean, it was that sort of adversity of me going, all right, well, this is super shit. I need to figure
Yeah.
out how to get out of it.
Yeah.
Surely, like some people can teach me this, because I tell you what, I wasn't learning it in university. In fact, what I was getting was like, very, very, what I was getting taught, which I guess is kind of what you need to teach, is like very risk averse, sort of, this
Yeah,
is
of
a
course.
PE
Yeah.
ratio.
Yeah.
Um, And I mean, that just kind of bored me. And that was all told consistently that technical analysis is useless. But hey, like, I don't know if you look at crypto, but I've made a career out of, I mean, being good at tech.
Yeah.
So, yeah. So to sum all of that up, after I burned that, I mean, during the process of burning those accounts, I was speaking to sort of like stockbrokers and whoever I could who was in the industry who I could talk to. I was trying to talk to them and just get ideas and tips. And then sort of, yeah, that club came about. Yeah, I mean, that was sort of that was the answer I was looking for, because I mean, I'd sort of had picked up enough to be able to I mean, manage risk and sort of pick an entry and exit. But I mean, the club was great, just having a lot of smart people together, sharing ideas. You know, I think you learn faster when A, you have friends to learn off, and B, you have competition.
Yeah, you have your ideas challenged, and you have to have a more coherent argument, really, don't you, or
Yeah,
strategy, because you have to convince other people, not just your own
exactly.
head.
Yeah, the best
Yeah, yeah,
ideas are forged in fire, right?
yeah, completely.
So yeah,
Yeah,
it was actually in that club that I got into it, like really into crypto. So I mean, that's the start of my trading journey. Um, if you want, if you want to, well, I mean, to answer the question, that's the start of my trading journey, and I guess that
yeah,
sort of leads into the crypto journey. If you want me to go
yeah,
down there
yeah.
now,
Let's continue with that. Yeah, the crypto.
yeah. So my first year of university. So remember, there was a gap I had where I was trying to do the Air Force thing and then didn't. And
Yeah.
then so I started doing university. And at the time, one of my friends was using the dark web, right? Silk Road. He was
Yeah.
purchasing things off Silk
Oh, yeah.
Road, right? And you leave that to your imagination.
Yeah.
And
Yeah, buying guns and hand grenades and yeah. Okay.
maybe not that
So I've
that
heard.
type of illicit
Yeah, yeah.
activity. But yeah.
No, sure. Yeah.
Yeah, he was. I remember lying on his bed, and he was telling me, he's like, "Yeah, so I'm using this thing called Bitcoin to like go onto this thing called the Silk Road, and then there you can buy like everything. And at the time, you could literally like buy everything. Like you could buy hits, and you could even buy hits on people and
Yeah.
stuff." So
Yeah,
um,
exactly. Yeah.
I
It's
was
famous
like,
for that. Yeah.
"Oh, I mean, that sounds pretty interesting." And I was sort of just learning deep. At the time I was learning about fractional reserve banking and how the banking system works. And I was like, okay, so I mean, so there's two things. You have some like you have something with a fixed supply, and then um, you have an asset that's sort of the currency of the dark economy, which is, you know, huge. So I was like, okay, look, that's interesting. And so that was when I first sort of dabbled in crypto. It went through a cycle there with the Silk Road and with Mt. Gox, like throughout Bitcoin's evolution. And this sort of goes to my sort of investment thesis. There's always a utility, like a new utility, which has a fundamental value. And then there's a speculative interest that'll come with the new utility.
When you say utility, what do you mean by that?
Well, it's a vague term because really it could be applied to anything. So, if for the instance of Bitcoin, if you think about it, if you get a price chart of Bitcoin, it's throughout its whole history, and then you go through and read sort of the fundamental events, like the main fundamental events that have increased its utility, you'll see these big price spikes. So, for Bitcoin's instant, you had the first transaction of Bitcoin for, you know, for two pizzas, right? Which famously is worth hundreds of millions of dollars now.
Yeah.
And then you had like the Silk Road. I mean, sorry, you had Mt. Gox pop up, and you had the ability to trade it. This is a new utility. And then you had real means of spending it through the Silk Road, which is another utility, right? So it goes from just being this little internet thing to having functionality. And those functionalities have continued to increase, even though one could argue initially the Bitcoin had all these utilities, but they weren't realized. And this is the main thing: is like, you know, if we flash forward to today, I think the utility of Bitcoin being a store of value and a hedge against inflation is only now being realized and getting priced in. Um, and I apply that framework to literally all cryptos.
Yeah.
The two things is what's the utility and where's the speculative value. When I first started trading, looking at the price chart and being like, well, this is like an absolute crazy beast.
Yeah.
And
Did you
I
win
was
big,
just,
lose big? Was it like
yeah,
that?
yeah. But this was
Yeah,
also
yeah.
in the crypto winter of sort of like 2014. And
Okay.
I remember looking at it and just thinking, like, I wonder if that'll ever come back. And I remember looking at the big spike it had and being like, geez, like, imagine, imagine if you've traded that thing. And yeah, didn't really think too much of it until sort of 2015. Again, with Trading Club, sort of started to dabble back into the space. And as sort of that next speculative cycle emerged, which, if you just want to like quickly flash of what the utility and everything looked like, you had sort of Ethereum emerge where you could do capital raising on the blockchain, which are ICOs. And that was sort of a new utility, which it ended in a speculative mania. I mean, there were other things there. You also had capital flight issues out of China, so you had a lot of Chinese putting money into Bitcoin to move it out of the country.
Yeah, and then the Chinese kind of clamped down on it, didn't they?
They did, and everyone clamped down on it, right? And now they're sort of starting to ease and
Yeah.
realize that, hey, I mean, this is here to stay. But yeah, I guess that's where I started to come back in. Essentially, we had this capital flight issue with China, and then we had ICOs, and there was a lot of money flowing into the space, and I sort of rode that up through 2017, and then in 2017 the interest from the public was just too high for me to ignore. So I started sort of consulting in the space with what information I had, doing whatever I really could do that was in my toolbox, right? So help just basically just doing everything.
Yeah.
That's sort of how I got into crypto, and then from there, I've had sort of worn multiple hats and done multiple things in the space.
Yeah, Nick, were you trading just buying Bitcoin or Ethereum or any crypto and waiting for it to simply go up? Or were you actually trading as a currency pair against the dollar?
So
Or were
yeah,
you doing a bit of both?
I was doing it everything, right? So you know, the space, the crypto space is so full of opportunity, and it's easy to get pigeonholed and just do one thing, right? So it's easy to just trade Bitcoin, and I fall into that trap still because I actually really enjoy just studying and learning about Bitcoin. But I was during that mania, I was investing in ICOs, I was trading all like so many different crypto pairs, and like I was basically doing everything any opportunity I could see, I was sort of trying to sort of capture.
Can you explain to us, because some people won't know, what ICOs are?
So ICOs are called initial coin offerings. They're essentially, rather than selling equity, you can sell your token or coin to anyone who wants to participate in the raise. And essentially, what it is like a new form of it allows the public to come in where VCs normally do, on projects.
A bit like an IPO, perhaps, but in crypto.
Yeah, yeah, and super early stage. And ICOs still happen, and in theory they're good, but they got sort of pillaged, by scammers and just people who were and opportunists. In 2017, a lot of people lost a lot of money, and to be honest, like there's still sort of a lot of legal question marks around ICOs. And to be honest, I sort of have largely stepped back from ICOs. I think there's sort of better vessels of gaining exposure to things. Then and also there's just so many, it's hard to keep on top of them. If there's something that's really good, I'll probably look to make an exposure.
Guys, just a brief reminder here. When you sign up to Yield Nodes through my link, instead of the usual minimum deposit of 500 euros, you can make a start with just 50 euros. Type in yieldnodes.com/a trader's life, or you can find the link in the show notes. Just take a look. If you're excited by the innovations in fintech, I think you'll be seriously impressed. How do you trade crypto? Firstly, what do you look for in a broker? Because after all, a lot of these currencies, or crypto rather, are not regulated. They don't go through the usual channels in finance. To begin with, what do you look for in a broker so that you can trust that you spend all this time when 10 grand or whatever it might be, and you can actually withdraw it as fiat or money?
Mm. Yeah, it's a good question. And, I feel like, because it's been a while, like I'm glad you asked that question because it's been so long since I've been in that position where you're starting out in crypto. I've forgotten actually how daunting it is. I mean, blockchain's a new technology, right? And as a result, there's a learning curve there. And crypto is filled with scammers still, unfortunately. But I mean, there's a lot of really good projects that are sort of really disruptive that are emerging. So you've got the best. I mean, you've got both. Well, you've got the best and worst of sort of different worlds there.
Yeah,
But
yeah,
when you
yeah,
when you're first entering, there's like I think it's just go where the volumes are. There's a few things that sort of everyone needs to know, and the first one is a website called coinmarketcap.com. It lists nearly all of the cryptocurrencies that exist by their market cap or volume or whatever. That's where you can see all of them, and you can click on the crypto, and you can get a link to its website, and you can read about it and learn about it. But also, you can go and check out exchanges on there and which exchanges have the most volume, and that's probably a good place to start. So, I mean, if you're listening to this and you haven't used crypto before, the exchanges that I think you should be using I think the best exchange everyone should be using is Binance. Whether you're a beginner or wherever you sit, Binance has fairly low fees, and they have the most extensive list of cryptos on there that you can trade. And they offer sort of leverage as well, if that's what you're into. There's also pathways to get your fiat crypto, whatever. I'm sorry, your fiat crypto, your fiat a
yeah.
value, whether it be sterling or dollar or whatever you're using, onto and off the platform. Now there's Coinbase, which I think most people sort of end up using first, but the fees are sort of higher on Coinbase, and they don't have as many pairs on there, so you just sort of got to be sort of careful. I mean, I think the progression that a lot of people make is they start on Coinbase and then they go elsewhere when they realize that they're paying quite high fees. So yeah, I mean, I would recommend Binance, and really, if you're not, unless you're going to get really deep into the way crypto is working, you don't really need to leave Binance, because like you probably don't need to go get an exposure on some weird exchange or a decentralized exchange. Like most people won't need to do that. So yeah, I would recommend Binance.
Yeah. And do they have charts and the usual thing that you'd expect on a trading platform?
They do, yeah. So they have everything you need, and you can do sort of like I think the orders are quite basic. So you have limit orders, and then stop limit, and then market orders. Maybe you have more in the margin trading section. If I'm going to put on more complex orders, I generally use an exchange called Bitfinex, and Bitfinex has sort of is an interesting exchange, because that's where tethers are really printed, and tethers is a whole other rabbit hole that we could go down potentially at some other time, because that's a real rabbit hole.
Okay. And so these different orders, I mean, I ages ago, I did a bit of Bitcoin. I just bought Bitcoin. Actually, I think it was not even Bitcoin, it was Ethereum. That was back in the day when I knew almost nothing at all about trading. So with Bitcoin, you hear of people losing thousands and thousands, and you think, oh, Christ, did you not use a stop loss? So with crypto, do you have the same kind of setup? I imagine you do. I mean, if Binance is providing against the dollar, then of course you do. Is that how you tend to trade? So that if it does suddenly dive on top of you, you've got this protection with the stop loss?
I'm not generally too concerned with the dollar amount of Bitcoin. I'm concerned about how much Bitcoin I own. So, I've been in the space long enough to know that Bitcoin will pull back 30 to 40% in a bull market, and I'm just going to ride through it. If I see it coming, I'll trade out of it and hold like a US dollar tether, which is sort of like a synthetic dollar, which is sort of cheaper to hold than going back to actual sort of dollars. If I see a pullback coming, I'll trade out. But generally, I'm only using stops if I have margin positions on, or if I'm in sort of a altcoin, which I'm sort of not really holding for any fundamental purpose. I'm coming in purely because of price action reasons. I will sort of secure that order with stops because I don't want to lose my Satoshi value, right? I.e., how much. So the fraction of a Bitcoin is called a Satoshi. Like the decimal of where you have cents to a dollar, you have Satoshis to a Bitcoin. So yeah, I'm more concerned with keeping that intact because my sort of belief is that Bitcoin will be worth a lot more than it is by the end of the decade, even in the next few years. And I intend to just have as much Bitcoin as I can.
Yeah, so you're accumulating it almost like gold and silver, or like a sort of precious metal, really. Yeah.
Yeah, pretty much.
And do you trade anything else, or is this pretty much taking up all of your time?
Yeah, so I really have only had my crypto, I've got like horses wear those like blinders. I feel like I've had those on for the last few years. Like I see opportunities in other markets and I want to get exposures to them, but like I'm in one, like I don't really have the time to sort of be able to go through and really justify exposures. And two, I'm just not that interested, to be honest. Like, I think sort of where crypto is right now in terms of the greater adoption curve is right at the precipice of the early majority, which is like, I don't know if you've, like you or your listeners have seen like what the adoption curve looks like, but simply it's just a bell curve and it's broken up into like 5 segments, which begins with innovators, and then say there's another group which I've forgotten.
Yeah.
And then you have early. Oh, yeah, so innovators, early adopters, early majority, late majority, and laggard. That's the 5 sections. And when you have the early majority enter, the adoption curve is at its steepest. And essentially what it means is you have the largest capital flows into the space. So you'll have the most development. To go back to another portion of my investment thesis with this stuff is, the more development you have, the more room you have for development. So it's like reflexive, almost. Someone develops a great technology that can do X. Someone else might develop a technology that works with that can do X and Y. And eventually start getting these really interesting ecosystems pop up, which I think the most interesting currently in the space is called DeFi, decentralized finance, where you can take out loans, you can sort of provide liquidity to exchanges in a decentralized manner. You can trade decentralized exchanges. So, I mean, for instance, if you take the whole whole Robin Hood saga that's just happened, you've got this centralized exchange closing people's trades and blocking trading pairs. The case for decentralized exchanges becomes even more bullish when this stuff's going on because no one controls these and anyone can trade them, right? So it's sort of like proper sovereignty of financial sovereignty. Like I had one more thing to say about that. It's gone. But essentially, this is a whole financial ecosystem growing with no with no center controlling party.
Do you think crypto will replace gold, for example, in as much that gold was always that kind of commodity or currency pair, if you're talking about spot gold, that was the one you'd go to when the dollar was in trouble, and now it seems okay. We had that kind of mad rush on silver just recently, but you wonder if that's something to do with the whole GameStop, Reddit scenario. But generally, you wonder with the surge in interest in the crypto really since the summer, isn't it, or late summer? Do you think crypto now is sort of the space that is almost encroached on any other interest in gold because of what it's doing, the huge gains?
Yeah, so when I think so, the sort of thesis that crypto is an inflation hedge, and it's a sort of safe asset to like a falling dollar, is has always sort of been spoken about, but it's only really now becoming a reality. And I think crypto is extremely reflexive, and sort of narratives can build and become a reality just because people keep saying it is. Whether it replaces gold or not, I'm not sure. But what I am sure of is there is demographics. So everyone around my age group and sort of younger can buy Bitcoin, right? Actually, anyone can buy Bitcoin, but the generations that are growing up on the internet, which, if you look at the trends, people are spending more time on the internet, including the youth, especially now during these mass lockdowns. Everyone's on online. So I think the thesis of digital gold will actually come true, because anyone can buy Bitcoin. B, the demographics are supportive of digital gold. People understand Bitcoin, or at least get the narrative. And C, it's hard for people to buy gold. And where do you store it, right? And do you want to own the gold certificates? I don't know. So I think just because of how easy Bitcoin is to access, and because of the demographics, people just want. If you're in lockdown now and you're like sort of in your teens to your early 20s, you're seeing Bitcoin, right? And you're seeing what it does, and you probably want it. You're probably sitting there going, well, I should probably own some Bitcoin. And then there's all these narratives being circulated about it being digital gold. I kind of think as these sort of younger generations start to grow, they're just going to naturally see that, want to have Bitcoin as part of their portfolio.
Yeah.
And I think the demographics are a very powerful thing, and there's a lot of money to be unlocked there still to flow into the space.
Yeah. I mean, if you were to have, sort of start all over again and with your first 5K, where would you start as a crypto trader? Just, right now, as it were, if you didn't have the history you've got, but you're starting out and you have a bit of knowledge, how would you start? You go to Binance, and what would you be looking at?
Yeah. I'd go to Binance and I'd buy Bitcoin, I'd buy Ethereum. I would learn about what they are and what they can do. Read the read the Bitcoin white paper. I think that's a must for anyone sort of entering the space. And then sort of start to learn about what Ethereum is and sort of what it could potentially be, in terms of like Web3, which is a concept that will start to become more popular in the coming years. Like it's already starting to gain traction now, but Web3 will be based on blockchain, and Ethereum is likely to be sort of the protocol for Web3. I mean, there's lots of other blockchains that will do lots of different things. I kind of see a future where you'll have all of these protocols, these blockchain protocols talking to each other, and they will build sort of the future internet, but also the future commerce platforms and logistics communication platforms. So I think understanding how Ethereum works, and then sort of check out other protocols. So, I am head of trading for the NEM blockchain. NEM's one of the oldest and most secure blockchains. It's a bit older than Ethereum, and it's never had any hacks or downtime. And sort of we're focusing more on building that bridge between between sort of real world business and decentralized economics, so we can bring in like large multinationals. But also what's interesting is central banks are now issuing digital currency on the blockchain, and the Lithuanian central bank just issued the first, well, not just, last year issued the first central bank digital currency on our blockchain. So I think what blockchain's doing, and so this, just at a high level, I think the bull case is, and what you need to understand if you're entering is what is blockchain disrupting. And in my opinion, it's almost everything. The whole financial system is going to be revolutionized. Banking is going to be revolutionized. But I think what we will see, and what a lot of people don't really understand yet, is that we're going to see money revolutionized. We're going to have programmable money, and that is a concept that's sort of pretty foreign to people. But central banks everywhere are looking at this stuff.
Yeah. What do you mean by programmable money?
So I guess programmable money is sort of the namesake for like a few different applications within crypto, where sort of you can program in functionalities to certain assets. So, for instance, I mean, like to do it, it's like black and white, sort of like how a central bank would probably do something like this is you would have like a certain currency that could only be programmed to be spent at certain vendors. You could have like value that is that will sort of constantly be taxed. I mean, which is obviously not what any crypto person wants. I mean, crypto people are more anarchists, right? But this is kind of the things central banks are looking at. But for instance, I mean, I think a good example is this concept of universal basic income is becoming more popularized. And I believe we'll probably see it because if you think about the amount of stimulus and printing and handouts that's happened since COVID, governments are probably seriously looking at, okay, how's universal basic income work? Because we need to be able to turn it on at some stage. And I think you could potentially have a currency. It would still be a sterling or a dollar or whatever, but it would only work with certain vendors. So if you have a universal basic income, that would sit in your wallet, and that would be programmed to sort of pay for your utilities and rent, and then it will only spend at certain vendors, i.e., supermarkets, but might not spend at like a off license or
Yeah, you're not spending this
you
on
know what I'm
booze, mate.
saying? Yeah.
Yeah.
So there's this side to it. But I mean, in the crypto side, it goes a lot deeper, and you can have money you can have crypto that sort of is constantly yield searching and whatnot, which sort of ties back into DeFi. But I guess the best example of where digital currency, like this is a great example my friend pointed out to me the other day. So the Chinese government has started building a central bank digital currency, and they did a pilot in one of their cities at the end of the year. What they called it a red envelope drop. Like, how in Chinese New Year they give these red envelopes with money in them.
Okay. Yeah.
The Chinese central bank gave, say, like, I don't know what the value was, but say like $100 worth of renminbi to several thousand of the citizens within this city. And again, that had sort of, it could be spent on in certain ways. At the same time, the US government was trying to send its stimulus checks, literally sending stimulus checks in the post that were getting lost. And like, what system like that? That's an outdated system ready for disruption, right? If the Chinese government can do it just by pressing a button. Now, I will say that it's very scary that if you're in China and the Chinese government's going to put all the money on the blockchain, because they can switch you off from your wealth, right? That goes against
Yeah.
what blockchain is.
Yeah.
If you
Quite.
have Bitcoin and it's in your wallet, that's yours and no one can take it. That's a decentralized blockchain. There's other uses of blockchain which do look scary in this central bank digital currency sort of
Quite. Yeah.
evolution that we'll begin to
Where
see,
they control you,
which
basically.
actually strengthens the case for owning Bitcoin.
Rounding it up, Nick, what's the future hold for you in the next sort of 12 months, with this rapidly changing world?
Yeah, so 2018 through 2019 was more or less a bear market, and I endured through the bear market, and I still sort of made a career in it, and had made lots of good contacts, and managed to make some money out of it. But you endure with the bear market because I had a fundamental belief that crypto wasn't done, and that it would continue to climb and it would see high highs, which is what's happening now. So I mean, the last sort of few months particularly have just been very intense. You just large hours of of trading, which and you know and that comes with everything. It comes with trading, like you have stress, you don't sleep much, you're constantly glued to a screen, um, and I will continue to do that until the bull market's over. I mean, this is one of the good things about being locked down is, um, you don't really have anything to do.
Yeah, it's that focus.
So
Yeah.
you're focused. Yeah. Um, so yeah, that's sort of what I'll be doing. Other things is, we run an internal portfolio at NEM. We're actually going to be, well, we're likely to be raising a public fund, and that's sort of after we release this new software, the symbol blockchain. That's sort of going to be the focus for me. I mean, that will sort of be taking on sort of more institutional money than anything, because there is quite large institutional flows into the space right now. There's just a lot of demand.
Yeah. I've heard
Um,
about it. Yeah.
but just on, I feel like this was probably, because this is a trading podcast, I feel like this is the best advice I could give to anyone, just because, I just said stress and then it popped up into my head is, I've been meditating since I was like 21, twice a day. And it is actually the best tool I have in my arsenal for, one, staying focused, two, fighting mental fatigue, and three, fighting stress. So that's what works for me. And if you're new to trading, you're going to go through many ups and downs. And in fact, the worst trading will be done at the peak of both your up and the trough of your down, is where you're going to make the worst decisions. So learning to find some sort of grounded state where you can consistently fall back to and make decisions will dramatically help you, because a lot of this game is being able to make rational decisions in stressful times. And if you're trading crypto, which is 24/7, often you're very tired.
With crypto, do you see signs of imminent collapse? It always seems to me like Bitcoin, because it shoots up. Certainly, in the moment, it seems to shoot up the way it does. It's quite difficult to read. It always looks to me overbought. So, how do you know, or you won't know, but how do you have a sense of when it's about to exhaust itself and do that kind of plunge south? Do you
Yeah.
have a sense? Are you fairly good at predicting that now?
Yeah. So, I mean, there's a bunch of stuff I look at. If you're looking at charts, you should be looking at them on the logarithmic view rather than sort of the normal view, because the log chart, you can actually get an understanding of structure, but you can't. It's just vertical on a normal chart. I use trading view. Trading view is great for being able to do different sort of analyzing techniques. But I mean, look, this kind of goes back to that sort of core thesis I have, sort of where is the speculative interest in the space? And there's a bunch of stuff I do that sort of doesn't involve looking at a chart to figure that out. Look, there'll definitely be technical pullbacks, which are sort of easier to spot. But what the hard part is knowing, has there just been a collapse in price and you're going to go into a bear market, or is it a pullback? So I guess I try and get an understanding of that speculative interest. And if I feel the speculative interest is too high, I'll start hedging out. But unless I feel like that's peaking, I'll probably I do the same thing anyway. If I can see it coming, I'll sort of move out a portion of the portfolio into stablecoin, and then I will take a short position out on sort of mainly BTC, but I'll do it on Ethereum and potentially some other assets.
Yeah.
In previous bull markets, like I said at the start of this, you can sit through sort of 30 to 40% pullbacks. So you just have to have the stomach for that.
Yeah, for sure.
Which not many people do. And that's why I said, like, you have to be able to make grounded decisions. And like, unless you've done the research and you sort of understand what's going on, you'll probably sell at the 40% pullback, and then you'll sit out and see it completely bounce back up.
Yeah.
So, I mean, but there's another thing which is sort of kind of cool, I thought I'd mention. Sometimes I'll literally just wake up in the middle of the night and be like, I need to do this right now. And I think that's sort of my subconscious just taking in everything that I'm taking in and being like, okay, well, potentially there'll be something at this time. But so I mean, that's happened a few times, which I think is kind of cool. So if you look at something that long, you dream about it. And sometimes I'll have a dream where I'll be like, okay.
Yeah. Great. Well, on that note, we should wrap it up. Been good. Very interesting. Thanks so much for talking to me, Nick.
Cool. No worries. Well, thanks for having me on. It was a pleasure. It was a pleasure to chat.
Yeah, likewise. Good. Cheers. Crypto trader Nicholas Pelecanos. Just before you go, if you're a regular here and enjoy the podcast, please check out my Patreon page at patreon.com/penrakespodcasts. Thanks very much.